Folks, many are caught in a financial nightmare. I'll explain what I mean and then get into the latest home prices and insights for the City of Toronto for week ending June 25th, 2025. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description part, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Recently, I was sitting with one of my clients. He had called me saying that he's looking to sell his current house and upsize to a larger home. So I'm at a meeting with him. First part, we discussed about the sale of his home, the selling process, the potential sale price. The next part of the conversation dealt more with the purchase, where he's wanting to buy, what's he looking for, the size of the home, budget to buy. We established all that. We established that he needs the sale in order to buy. We established that we're going to sell first and then buy. We work all this out. At the end of all that, it's a very natural thing for me to say, so, are you pre-approved for this purchase? And he says, oh yeah, he spoke with his mortgage broker and they said no problem that he's approved. I said, great. I'm assuming have something in writing then, which lender is giving you the mortgage to do this? And he says, oh no, there's nothing in writing. He didn't send me any emails or anything. My mortgage broker asked me a few questions on the phone. My income, how long I've been employed, is my credit rating good? And I answered his questions and he says, yeah, go ahead and buy, you're qualified. And I'm thinking, red flags are going up in my head when I hear this. And I said, so you got nothing in writing? No. I said, at the very least, did he ask you to send him the documents based on the questions that he asked you? Your letter of employment, things like that. He says, no, he just qualified me on the phone. My client's confident in his own financial position there, and he says, yeah, no, but I'm good. I'll qualify for that. And I said, listen, the mortgage brokers that I work with, they're going to give you something in writing. They're going to, be very specific. First of all, they're going to verify your documents, and then they'll send you an email saying this is what you're qualified for, and your parameters. And he says, okay, I'll ask. Good. So the next day he asked his mortgage broker for something in writing, and the mortgage broker says, don't worry, just go out and buy and we'll get you the mortgage. Don't worry. So he tells me this, and I said, listen, you really should get a second opinion here. And he trusted me. So he spoke with another mortgage broker, and that mortgage broker said, no. Well, after verifying the documents, taking a few days to do some research and present the application to the different lenders, he wasn't qualified to buy. He was qualified to buy, but not for the amount that he was looking for. And so now he's kind of reevaluating the whole selling and upsizing situation. This whole plan now is up in the air, and he's reevaluating that. So we avoided, or my client in this situation avoided, a nightmare situation. The nightmare situation would have been that we sell, we sign an agreement of purchase and sale on the home that they're buying, and then when it's time to get the mortgage in place, he can't get that mortgage in place. That's the nightmare situation. Think about it. You've sold. You've purchased on paper. Now you need to actually purchase by getting the mortgage. And that person who told you, yes, go ahead, is going to come up with a story as to why no longer you can get that mortgage. That is a nightmare situation my client avoided. However, many people, some of you may be watching this channel right now, find yourselves in that you've bought and you can't close. The fact that my client was selling in order to buy is just another part, because there's other people buying for the first time or buying without having to sell, and they can't get the mortgage they thought they were going to get. I don't mean you're off by a couple of bucks. I mean you don't qualify for the mortgage. You're on the hook still to close. That's a nightmare situation for many, And I've spoken to many people who have found themselves in that situation. Many people that follow this channel that have called me just to tell me the problem that they have. And when we backtrack, and I said, well, what happened? How'd you get yourself in it? What happened? Why? The red flags were there. So let me just throw some of these red flags out here to you for you to avoid. If your mortgage broker, the person you call to help you get a mortgage that you're looking for a pre-approval on, is telling you, yeah, go ahead and buy, don't worry, that's a red flag. But I mean, don't worry, is that they've not sent you any kind of email or letter or anything stating what you're pre-approved for. That's a red flag. If they've not verified any of the documents, your employment letter, if they've not looked up your credit score, if they've not asked you for notice of assessment, whatever the case may be, that's a red flag. Like, I know lots of people that I've started working with that had plans to buy, such and such a property. And then when we go through the pre-approval process, they're not qualified. Lots of people don't qualify for what they think they'd like to buy. Well, you need to know that up front. You don't want to know after you've signed an agreement of purchase and sale. And if your mortgage person is asking for money up front, that alone is not necessarily a red flag, but it's got to make you wonder why, because there's many phenomenal, great mortgage brokers that don't ask for money up front. The mortgage broker we refer won't ask for money, never mind up front, just won't ask for money. So if your mortgage broker is asking you for money and then says, oh, by the way, I'm not issuing you a receipt for this. This is more like cash money under the table for me to get you qualified. Folks, like, what more do you need? That's an army of red flags right there. Yet some people still, buyers will go through this process and then wonder why they get in trouble at the end, when all of a sudden, days before closing, that same mortgage broker says, oh, something's changed. You no longer qualify for this, but I have a plan B. And that plan B is going to cost you more money, be way more expensive, and you're stuck because you need to close. Lots of pre-construction people that are closing now find themselves in this situation. They thought they were qualified, took the wrong advice from the wrong person, and now are stuck. They've got to close. So watch out for those red flags. They're there. They're flashing. Keep an eye out for that. If you think this video can help somebody you know, please pass it along. And if you get value from what we're talking about here, consider subscribing. Now, let's get into the numbers. Here we go, folks. We're focused on City of Toronto for week ending June 25th. We're focused on the freehold market. I do have 3 months of data of average sold price on the board here. First of all, I also have condo average sold prices just to give the difference. The average condo price of $718 and the average detached price for the City of Toronto of $1,593. There's an $875,000 price difference between the two average sold price. So somebody selling a condo and thinking, yeah, I'm going to sell my condo, buy a detached. It's not that easy. There's a huge delta between. But if we look at just the freehold market, detached semis and towns, and we go back 3 months, we were here to where we are today for all three. Detached semis and towns, average sold price has come down over 3 months slightly. Not aggressive, but prices are down. Let's start with detached properties. This is, again, if you're joining us for the first time, welcome. But we're just focused detached properties just for the City of Toronto. For week ending June 25th, 163 detached properties were sold. 36 of those sold at $2 million or more. Now, if we go back to the beginning of the year and we look at sales, sales were trending up. They usually do. They go up towards spring, into spring, and at some point they turn around. I feel perhaps sales now have started to turn around. We're headed towards August, where it's the slowest of the months, usually the summer months. And then again, sometime September, October, sales pick up again. So they were up, they're trending down now. Average sold price, $1,593,000, lower than the previous couple weeks, but overall trending down since we're talking closer to, let's say, the beginning of March. Average sold prices have been trending down. Compared to last year, 1,593 for the same week a year ago is 11% lower. The median price of 1,350 is also 11% lower. The dotted line, that's a 4-week moving average. Both average price and median price, based on the 4-week moving average, shows prices for the last 3 months have been trending downwards. 163 sold, 63 of those, so 39%, sold at list price or more. 2,986 are available for sale. So active listings, it is down from the previous week to where we are now. Not by much, but it's down. But overall, active listings has been climbing. And months of inventory down by a smidgen. It's now sitting at 4.2 months of inventory. Pretty much almost in the middle of what we would consider a balanced market, between 3 months of inventory and 5 months of inventory. So that's for all detached properties across all the city of Toronto. If we break the city down into 9 different sections, the 3 most aggressive, we'll call it, or most active, the supply and demand ratio, which is months of inventory, the 3 most are Etobicoke, sold 35 units, 35 detached properties, 2.8 months of inventory. High Park, Parkdale, sold 13, 2.2 months of inventory, so a bit more aggressive. Then East York, Riverdale Beaches, 26 sales, 2 months of inventory. What you're going to find in these 3 areas, more so than other areas, are a lot of listings based on a pricing strategy of having an offer date. So you're going to see a lot of that in those areas. Less, say, where there's an 11.9 months of inventory, or a 7.3 months of inventory, or a 7 months of inventory. There'll be fewer properties being sold with an offer date strategy. But East York, Riverdale, High Park, and Etobicoke, a little bit more. But that's still the whole city, but broken down into 9 different sections. Let's look a little bit from a different angle to try to understand 3-bedroom pricing versus 4-bedroom prices. For 3-bed detached properties, 74 sold for week ending June 25th. Sales are trending down. Average sold price is $1,307,000 for all 3-bedroom properties that have sold. Average sold prices were trending down, and maybe they still are, but for the last couple of weeks, they're a little bit higher each week. So overall, I would say they're still way down from where we were before, but I'm just pointing out for a couple of weeks, it's gone up. I don't know if that's a trend yet. Compared to last year, 1,307 is 9% lower than where the average sold price was for 3 bedrooms a year ago. Here's 4 bedrooms, 50 4-bedroom detached properties sold. Those sales are trending down. Average sold price is $1,990,000. An average sold price for 4 bedrooms seems more steady. We're not necessarily seeing the trend up, trend down. It's more flat. Compared to last year, 1,990 is 14% lower than where the average sold price was a year ago. And if we compare the two, we see that the 4-bedroom, more flat, the 3-bedroom trending down a little bit, mostly. Months of inventory for the 3-bedroom is 3.7 months of inventory, and months of inventory for the 4-bedroom is 5.2 months of inventory. So there's a difference in months of inventory. A lot of that has to do with the price, right? Average sold price, little over 1.3 million for a 3-bedroom. Average sold price for a 4-bedroom is borderline $2 million. And the delta, the difference, is $683,000, 3-bedroom versus 4-bedroom average sold price. So there's a big difference. Some people may want a 4-bedroom, can't afford it. There's a big difference in buying for $2 million and then buying for $1.3 million. Huge difference. Here's semi-detached properties. For week ending June 25th, 64 sold, 13 of those sold at $1.5 million or more. Average sold price is $1,249,000. 1,249 is 1% lower. The median price of 1.2 is 3% lower. These are, when I say lower, it's year-over-year comparison. And both average price and median price have been trending down slightly. 2.3 is the months of inventory for the semi-detached properties. Townhouses. These are freehold townhouses. For week ending June 25th, 24 freehold townhouses have sold. None of them sold at $1.5 million or more. They all sold for less than that. Average sold price, as a result, no freehold townhouse selling more than $1.5 million. The overall average sold price is way down to $1,056,000. But even if we just ignore the current week that we're in, average sold price overall seems to be trending down for freehold townhomes. But compared to last year, $1,056,000 is 25% lower. It's a big number, I know. 25% lower. The median price of $1,025,000 is 27% lower year over year. Months of inventory sitting at 2.6 months of inventory. Here's a quick summary of months of inventory. Overall, you're going to be experiencing, in most cases, a balanced market. But I gotta say, neighborhood, price point, really plays into that. I know I say it, it's because there's so many people surprised when I say, yeah, it's balanced, and then they find themselves in a multiple offer situation. It really is area and product specific, meaning price point, whether you're going to be competing or not. Thanks for watching. Have an awesome day.